we help them mitigate risk, right? We can execute a guaranteed maximum price contract. We can guarantee delivery and completion on a specific time frame so that they can plan their business and their requirements around that time frame. And so we take all of that work and risk and we deliver a project to the tenant in a risk-free and predictable manner.
Welcome to Industrial Advisors Podcast. We're live at IAMC in Little Rock, Arkansas. Kyle Bach is joining us on our team, and we have a great guest here, Joe Neckles, who is with Fortress Investment Group and runs all of the build-to-suit business for Fortress. Is that right?
Correct.
Yeah, so tell us a little bit about that role and kind of what you're doing, and then we can dive into some of the build-to-suits and advantages of doing it after that.
Perfect. Thank you, Matt. Thank you for having me, and Kyle. So Fortress is an alternative asset management firm based in New York City. Been in business for over 20 years and diversified investment strategies across real estate and many other verticals. I sit within our single-tenant triple net lease investment business with my partner Adam Furstein, who you know, and others. The whole team is actually based in Dallas. I'm based in our New York City office. Our objective is to invest in long-term single-tenant triple net lease properties, and we do that through buying existing net lease assets, executing sale leasebacks with owner users, and my main area of focus is partnering with developers and users to fully capitalize built-to-suit projects.
Yeah. So when you, I imagine you've built a really good relationships with a lot of like the end users that enjoy doing build-to-suits for the obvious reason. How do you imagine you got your groups that you work with already, but how do you go about expanding that network, and is it doing things like this? And,
Great question. So we're a sponsor here at IAMC, proud Chairman Circle sponsor, and we go to a lot of the brokerage sponsored events as well. And so the objective is to be close to really developers, tenant reps, and users, right? So the developers, including Stonemont, Prologis, Link, who are all here today, tenant reps like yourselves and others. And then one of the unique things that we love about IAMC is the opportunity to speak to users directly, because really they're our ultimate client. Our objective is to live with them long-term, subject to these long-term leases. And as we can be useful partner to them with restructuring leases, recapitalizing CapEx requirements, we really enjoy those direct conversations as well.
So what are the reasons as tenants are thinking about markets to expand into, or if they're already in existing markets, but they want to grow in those markets, why would they consider a build-to-suit long-term lease versus say ownership versus say leasing a spec building?
Great question. A lot of these uses are becoming more and more capital intensive and more specialized, right? So we look a lot at manufacturing, cold storage, data centers, and these uses are very specific. So it's hard for many of these users to just go in and take a 1,000,000 square foot, 40-foot clear height cross dock facility, because it doesn't necessarily suit their specific need. So one big advantage of build to suit is you get a custom built building, right? So whatever your requirement is, you can build it around your business. One really great benefit. The other thing is, and I'd love to hear your perspective on it, is as we've seen more absorption, there's not as much availability in a lot of these markets.
Correct.
So it's easier to go tie up land and execute a built-to-suit to your own specifications than compete with many other users for existing spaces on the market.
Well, you hit it. I mean, the big box, bulk market is getting tighter and tighter. And, now that Amazon is, back leasing large buildings, right, it's becoming more and more challenging to find million footers on the spec side. So doing the build-to-suit, in addition to just controlling that land, but building it exactly the way that tenant wants it is obviously an advantage for them as well.
Yeah, and they're more and more capital intensive as well, because the equipment in a manufacturing project is so expensive, oftentimes much more expensive than even the build.
Right.
Data centers are a whole other conversation.
Different ballgame, yeah.
Cold storage. So the capital requirements are becoming bigger and bigger, and we're proud to be a partner and a reliable capital partner for these users to put together a full capital stack and own long-term in a partnership with these tenants.
How power has become an issue for a lot of users, for a lot of developers. How are you guys navigating the power conversation early on in a build-to-suit to make sure that you have the capacity, especially when you're talking like manufacturing, to make sure that you're able to do that and execute it on it in the right timing?
Yeah, we really take the tenant and the tenant rep's lead on that. We say is we're happy to go where these tenants want to be and build what they want to build. When the tenant has identified a site through their advisor and their own consultants where the power works, we're happy to provide as much capital as they need to bring that power to bear for their project and their requirement.
Another interesting thing to think about, or I guess that tenants think about too, is a build-to-suit lease versus ownership, right? And what are the reasons you would favor a lease versus ownership? And we have a client going through this right now where they have expansion capability at a current building but are preferring to lease. I'm sure you've experienced that and can touch on the reasons why a tenant would consider a long-term lease versus ownership.
Yeah, great question. And this really is the whole thesis behind our single-tenant triple net lease investment business is the capital is better invested by these tenants into their business versus invested into real estate.
Yeah.
So if you're looking at a $100 million project, it's much more efficient for this user to come to us to provide that $100 million subject to a long-term lease, as opposed to investing that $100 million of their own capital, which is much better invested into their business at a much higher return.
Yeah. Are you seeing that more often? Is that a newer trend, do you think? Or is that a trend that's been in place for a while where companies, are they preferred ownership in the past and are pivoting away from that? Or do you think that's kind of been an existing trend?
That's been a trend for many, many, many years. The desire to execute sale leasebacks and build-to-suit financing, it's been a business since I've been in the business for 20 plus years. And that's always been the thesis is these tenants' capital is better invested into their business versus invested into real estate.
Yeah, those companies are looking to make a lot of infrastructure and put that into the building. They want to be assured they can control the building long term, which you guys do on those build-to-suits. You're probably structuring deals 10 plus years plus a bunch of options, right?
Yeah.
What's a typical lease that you do on those build-to-suits?
Yeah, our preference is 15 plus years of lease term. Really 20 plus is our sweet spot, and with many extension options. So tenants can control these buildings long term without having to invest their capital into the project.
Yeah. They're looking at it saying, well, we know how to make whatever we're making inside this warehouse. We know our business better than anybody, and we know what that return looks like. Let's stay in our lane. We'll partner with you guys, and you guys build us the building and do it that way.
Absolutely. And we help them mitigate risk, right? We can execute a guaranteed maximum price contract. We can guarantee delivery and completion on a specific time frame so that they can plan their business and their requirements around that time frame. And so we take all of that work and risk, and we deliver a project to the tenant in a risk-free and predictable manner.
How long do you like engaging with these conversations with the users before you execute on a plan?
Yeah, well, you guys know better than me. Working with corporate America, it's like we've got a project that's ready to go this year. This year could mean next year. This year could be never. So we're very happy to spend time with these users and developers, and not every project gets off the ground ultimately, but we're seeing a much better hit rate this year, I think, than over the last couple of years. There's been so much volatility over the last couple of years in the markets and geopolitically that this year is feeling like a much more active market in build-to-suits.
Yeah, in 25, it really seemed like there was a lot of let's hit the pause button and get into next year. And fortunately, I agree with you. We're seeing more decisions getting made, deals getting done, especially in that larger space, size range. So that's been a good thing to see.
Why do you think that is? What are you hearing from your clients as to why it's easier to transact in today's environment versus 2024, 2025?
Yeah, I think there was just more uncertainty in 24 and 25. And now, businesses are back into making longer term decisions and saying, okay, we kind of understand where we're at, but business has to keep going, and we need to keep expanding, and we need to keep growing to get to where we want to get to. And so you can only hit pause for so long.
Yeah, we're past the election year, we're past tariffs, kind of, but at least Liberation Day, right? Those were the two big reasons in 24 and 25.
Yeah.
Now there's geopolitical reasons. There's always going to be a reason. But to Bill's point, business has to go on.
Agree. The easiest thing to do is nothing, but eventually that's not an option anymore.
Yeah, and honestly, the market softened in the industrial space. It was so good for so long, and a lot of the core markets were 3% or under from a vacancy standpoint. Well, that's gone up, and so some of these companies are looking at it saying, well, great opportunity to take advantage of a softer market and lock into a longer term lease at rates that we haven't seen in a few years. So controlling that aspect of it too is, I think, helpful.
Agree completely. And the rate environment was high for several years. 2023, we saw several banks go out of business, right? And so construction lending was very tight in 2023. And we were able to be a reliable capital provider even through those very tumultuous months in 2023. And Fortress is proud to be there during those times when it's not necessarily easy to transact.
No, that's nice to have. So, what are you doing the rest? So, this has been great. So, there's a couple days left in the conference. What's on your agenda? The rest
Yeah,
of the,
you know, it's pretty open agenda today. Kind of, you know, hang out in the lobby and meet some people and shake some hands and
find a couple build-a-suits while you're there.
find a
It's a
couple
good group to find
build-a-suits. Maybe sit down and have a steak dinner later tonight. So happy to be here in Little Rock. I've never been here before.
I haven't either. So, it was not easy to get to from Seattle. Like Chicago to here, a little easier from New York.
Yeah, it was a direct flight from LaGuardia. So
A fun city to check off the list.
absolutely.
Thanks for joining us. We wish you guys continued success. We know what a good group you guys are to work with, so appreciate you joining us on the podcast as well.
Thanks so much.
Awesome.